Hi, what's good everyone, and welcome back to another video here on our YouTube channel. It is a lot earlier than what this video would normally be posted. It is actually just 5:45 a.m. Here in London now of Thursday morning. So it is still in the middle of the trading week, still quite some time to go, and I hope all of you are doing well. But I've been getting a lot of requests recently on making a video on entry confirmations, and I also made a poll quite recently on Instagram. And if you don't follow me there, make sure you do that so you can also ask questions and suggest things that you're interested in as well. But regardless, a lot of interest in regards to entry confirmations and just sort of basically what rules to consider before you actually execute a trade when you're now at a demand zone or a supply zone in the form of an order block. So I was just going to cover that real fast. Going to jump straight into it. Don't have too much time, and want to make this video a little bit shorter than normally, just to make sure that it's concise and perfect. So gonna get straight into it. All right, I just want to start off with a little bit of a nice presentation, basically just to cover the theoretical aspects of entry confirmations. And here we can see on the screen a diagram that I hope many of you recognize easily, which is the basic structure that we're looking for when we're trading supply and demand. We have this area of indecision here, which is essentially an accumulation, followed by this very powerful bullish push in this case, which would then form what we refer to as an order block. Where we have a lot of order sittings, and in this case it actually being a demand region. And what we would like to see is for price to come back down into this zone, collect all these orders, and with those orders collected, then produce a powerful reaction in the form of a bullish continuation after having collected those orders down here at the order block. But what this video will be focusing on is exactly what happens in this region right here, the region that I've circled. Basically how you should be looking to actually enter your trades, because what you don't want to happen is for price to just come down into your zone, you entering just blindly anywhere and price just continuing down. And that is a lot more common when you're dealing with touches that are above 2, so 3 and 4, but it can still happen to the second touch. So we want to cover that a little bit in detail, how you should go about actually identifying a proper structure, or when structure now favors the bias that you have identified. So we're going to be looking at that. And yeah, as said, not just in the case of second touches, but in the case of the arbitrary case where we have any number of touches. So yeah, just price reaching your order block in general, and then going from there and deciding whether you should enter or not. So there are two main questions that we want to cover, and the first one is of course when to first of all use entry confirmations, or more so the appropriateness in the case of the order block that you're wanting to trade. And then second of all, the actual technique that you're going to be applying when actually confirming your entries, how you're going to be confirming them, how you're going to be identifying a break in market structure, and so forth. And so the first question, when of course the main point is obviously that it's always best to essentially always confirm your entry. It is only in your gain to confirm your entry. It's only going to increase your win ratio. But I would say personally, and at least for me, it is much more needed when you're dealing with a touch in the order above 2, so 3, 4, 5, and so forth, since anything after a second touch, orders are just getting more and more consumed. And as we know, they won't always be there. So the less orders you have in the region, the more you want to actually be confirming your entry and making sure it goes to plan, or just skipping it altogether, really. And yeah, limits, I only recommend those for fresh touches. So that would be the second touch, or the first one, depending on how you're actually viewing it. But in that diagram, it would be the second touch that we saw in the beginning. And yeah, confirming is only beneficial to you. And then moving on to actually how we're going to be confirming our entries, it is basically using price action and market structure analysis, something which is not native to supply and demand trading at all. It is prevalent throughout all of trading. And basically you just want to see the structure of the market be in your favor before entering. And so here we can see two drawings of, or two very simplified drawings of price. And in the first case here on the left, we have an uptrend, and on the right we have a downtrend. And the only actual elements that define these are the following. We have higher highs and higher lows. That is what an uptrend is. That's what defines an uptrend. And similarly, a downtrend is a formation of lower highs and lower lows. So yeah, basically, if we're looking for a sell, we don't want to be seeing higher highs and higher lows. We want to see a break into this type of market structure before actually entering a sell position. So the first step, obviously, is to determine our bias, and this we will know by the order block that we're looking at. If we're coming into a supply zone, we'll be looking to sell from that, and if we're coming into demand area, we will be looking to make a buy of that. So yeah, coming into the supply zone, you're always going to be coming into supply zone from below, and this is a pretty simple drawing of that it would look like, given that this indecision here is where we draw our order block from, and then price coming into there. So basically we want to see the bullish market trend break and the bearish market trend to start, which would then be lower highs, lower lows, and so forth, like we just saw. And similarly, coming to the demand zone is exactly the opposite. We want to see a break of the bearish market structure and instead see a formation of higher highs and higher lows and so forth. So now we're going to be looking into some examples, and first of all, I'm going to be covering some where I don't feel that using confirmations is fully necessary, and these are obviously in super fresh touches of just formed order blocks, and some of these or many of these I've covered before, either here on YouTube or on Instagram. I've shared them, but one of them would be the video I posted on sniper limits not too long ago. As we can see here, we had a very fresh zone. It's a little bit clearer here, and price coming down, and literally within a minute it was already back up, so you wouldn't even have time to confirm anything. Price barely even made it to the middle of the zone. Only one of my limits got triggered, so yeah, this would be a case where it would be fine to just apply limits because we haven't had price come down here before. And here's another case that I shared, it was last week, I think. A very similar case, also on gold, a super fresh zone. Literally price spent no time in here whatsoever. And yeah, this was also done off of a limit, and here we can see a little bit of a nicer picture of it right there. See really how fast it was down there into the super fresh zone. And then another one on GU, which was actually yesterday, which if you follow me on Instagram you would have seen. Basically very nice fresh demand region right here in that form of the order block. And yeah, using limits, had 3 of them set up right here, 2 of them only hit, but yeah, it looked pretty funny if you looked at it from that perspective. But now we're gonna move on to the actual main part of this video, which is actually confirming trades or confirming your entries in a live scenario. And I'm gonna be using 2 examples, one on gold and one on GA. One of the trades I think I've covered at some point before, but we're going to be covering from the ground up, and we're going to be using a high time frame observation to basically identify our order block, and then a low time frame execution to actually enter our trade, and at that lower time frame actually work with the market structure analysis to produce the confirmation that we want to see. So I'm going to get straight into that. So starting with gold, this was actually a trade setup that took place quite a while ago. It was at the very beginning of 2021, very beginning of January. But basically what we had here, if we just scroll out a little bit, is we had a nice order block here on the 4-hour time frame. We had a very powerful zone identified right here at the beginning here with this nice volume spike going on. And we came in here for that second touch once right around the beginning of November, and had an immediate rejection of the zone as expected from that second touch. And now, and I mean, price didn't spend a lot of time in this zone, which is important to note, because it means that it is still a zone which has a lot of power. So all we're really just gonna do now is wait for price to come back up into this zone again. And since this is now the third touch, we don't want to be entering a position immediately, since we have no idea as to how many orders are still left in this zone. But we still instead want to wait for price to come up into the zone, and then actually in this case see a break of market structure from being bullish to bearish. And then if that now happens, we would be looking to take a short. So for now it's just waiting for price to come into the zone as we always do. And we're starting to reach it now. Gonna zoom in a little bit. It's very slow here. Just gonna keep on going. I'm gonna go down a little bit lower now, maybe 15 minutes or so. We're coming towards the middle of the zone right here, but we still haven't really seen any signs of bearish situations. We're still making higher highs and higher lows. We want to see an actual break of the structure before entering that sell position. So we're just gonna keep going. It's still bullish, it's not looking bearish at all. I want to see an actual proper break, not some half break. We want to be sure. So here we're starting to see a little bit of red candlesticks, and here we go, a little bit of a push, but we still have this general area here that we want to break below to actually make a lower low. So we're not looking, or not entering yet. So we're just gonna keep on going. See, if you now trade the support and resistance, we have a little bit of nice minor support line right here. It's not the same supply and demand at all, but it's something we want to see being broken before entering. So just gonna keep on going. Still okay. Now we'll keep on pushing bullish, still making higher highs. Now we have a little bit of red candlesticks again, and here we go, big momentum push. So now we've actually broken what we saw as this little support level right here. So I'm just gonna mark that up right here. And now the ideal case, now that we've seen quite a lot of bearish momentum, and this is actually, we have pushed past this higher high, higher low formation that we had going on here. We have seen a complete break, so now we would want to see a little bit of a retracement towards this zone right here to enter our actual short, and then trade alongside the momentum, not enter here right away because it can obviously retrace. And if you trade support and resistance, you know the break and retest approach is very common. And here we go, coming back in, seeing there we go, nice wick rejection right here, having broken that support level after having come off of that supply zone. So this would be a great point to enter a short, see some nice rejections. Stop loss, you can have it be very, very conservative all the way up here, but since we've actually seen a break of structure, we could even put it up here, because if we were now to push up here again, we would have come above the support line, so we would be looking to break that again. So that is why we can put our stop loss this tight here in this case. And as for TP, we have a long way to go. This was way out on the 4 hours, so gonna mark that way down, and then I'll go down on the 15-minute again and see what happens then. So we're in the trade right now then, and yeah, just gonna fall off of that supply really. Gonna go down on the 4 hour just to make it go a little bit faster, but yeah. So this was actually a third touch, not a second touch, but once again we're using entry confirmations now, because once again we weren't sure at all as to how many orders were actually sitting here. But yeah, it worked out really well. Obviously it's in hindsight, but this can be applied in the exact same way in the live markets. And just gonna go on to the last example real fast. This was actually a trade that I covered in a video very, very recently. I'm gonna have a screenshot of the thumbnail there. You've probably seen it already, but with a little bit more of a focus on the actual entry part. So what we have here on GA out on the 1 hour here, I think it might have been last week that I covered this, or the week before, but we had a nice, very nice area of supply right here. We had this indecision candle followed by this very, very bullish push, and we came down here once for a second touch. Very strong reaction off of that, following the theory that we want to see. We came down for not necessarily a third. We kind of came into the block, but not really, and it's kind of still looking for that third touch. Wouldn't really count any of this. We haven't come down towards the baseline yet, which would be the middle point. So we'll kind of see, well, now since we've actually been down here once already, I want to see price come down to at least this point here, to sort of cover the entire block. And then after having covered the block, I would be looking for a break of that then bearish structure to bullish to take that long off of the demand level. So just gonna keep going. I have quite a lot to see before actually being confident in taking this long. So just gonna keep going. So I'm pushing down a little bit, gonna go down to 15 minutes or so, just for to be more precise. So now we've essentially covered the whole block here. We have a nice sort of doji kind of a candle. We have long wicks on both sides, and then gonna see what happens next. So we continue to push up a little bit. We have formed nice wicks here that are rejecting quite a bit, and I mean, we do actually want to see an actual full break of structure. We don't just want to see some engulfing candles if you want to be completely sure. So here we go. Good that we didn't enter yet. And okay, here we go again. Still nothing. And I mean, what we really want to see now is probably a break above this. This was the last point. We were to break above this, we would make an actual higher high. So we're looking for that, and I'm pretty sure that that is exactly what happened as well. So here we go, bullish above that, yeah, and they're rejected, and now we're gonna see. All right, it's continuing bullish here. We've actually kind of broken that lower time frame market structure. I mean, you still have all of this to break through as well, but entering here now, you could have a very, very conservative stop loss, and reaching this point right on here, you can move it to break even essentially almost immediately. But yeah, a good point to enter right here, since we do get that tight stop loss. You can put it just right there, just near the wicks. Can even have it a little bit tighter, since we don't want to be pushing back through this resistance line here that should now turn support following typical price actions. So here we go. I think I set my target somewhere around here. It's not too important for this given the actual content of this video, but I put it there somewhere. You can watch the video if you're interested in the full trade. But yeah, that's how you would actually have confirmed that entry. And yeah, it's the same thing all the time, really. Yeah, I mean, if it had gone break even, I guess it would have been a break even trade. But I mean, that's generally the type of way that you do want to confirm your trades. You want to actually look for a break of structure to then turn into a structure that's actually favorable to the direction that you're trading with. If it's especially the third touch or something like this, you do not want to just enter blindly. You want to wait and see. And yeah, that's that really. To quickly wrap up the video, I thought I was just going to cover the main important points and takeaways once again as a little bit of a nice summary. So once again, confirming your entries will obviously only really be beneficial to you. It's going to increase the win ratio of your trades if done properly. And this video actually only covered confirming your entries through the observed break of market structure. So something from lower low and lower highs to higher highs and higher lows, and vice versa, which in my eyes is the most important and actually the simplest approach in actually confirming your entry, no matter the type of style that you now are trading. And but there are many other price action techniques that you can use beside this to confirm your entry in an order block, or more specifically actually increase the confluence of your confirmation, which is a nice thing always. And some of these are candlesticks, patterns such as like wedges and things like this, triangles. We can have breakdowns, we can have fake outs, we can also have fluctuations in volume. All of these are also valid ways to work with increasing the confluence or actually confirming your entry on its own. But it is way too much to cover in one video. I might make some more videos on some of these specifically in the future. But if you have been keeping up with my Instagram and so forth, I have actually been posting a little bit about an ebook that I'm working on, which will cover everything from supply and demand, liquidity, order blocks, all of that, together with actual normal trading knowledge, really price action stuff that would actually be required to basically trade the same way that I trade. So that is something that I'm working on. But if you want to see something else in the meantime, please feel free to let me know in the comments. And as always, if you enjoyed the video, please make sure to give it a like. It really helps me out. And also subscribe in case you want to see more. And other than that, trading week is still going. I wish all of you the best of luck, and see you next time.